Hey, I'm John Ray.
And I'm Austin with South Street.
Man, it's been a minute since we did this,
It has been a minute.
but there hadn't really been great things to talk about when it came to mortgage rates.
Not a ton, not a ton.
I mean, look, it's probably been almost a year since we've shot a video,
Yep,
and in the last year, rates have stayed pretty consistently the same in the high sixes, lower sevens. We haven't had any
totally.
like crazy things that have happened, but in the last week, we've seen a little bit of movement. What's going on?
Yeah, I mean, last really 3 to 4 weeks, we've seen a downward trend really, and it all really started with starting to see some cracks in the labor market form. Like obviously, last Friday we had the jobs report that
Hmm.
was kind of a blow to the broader economy.
What do you mean for people who are
Yeah,
just like tuning in? What do you mean by a blow? What is that?
right. So the estimates, I believe, were around 80,000 jobs created for the jobs report on Friday, and the number of jobs that were actually created were around 20,000. So
Okay,
significantly less, and we would call that and categorize it as a miss. So the
sure.
market, the bond market responded to it, which caused mortgage rates to decrease. Um,
So again, I'm gonna just play dumb for a second.
sure.
Why would the jobs report have an effect on the bond rate and then the mortgage rate?
Yes. So basically, what happens is there's a sell off in the equity markets, meaning the stock market, and everybody goes into bonds because they're safe assets, right? They're safe investments. So cash moves, mortgage rates tend to follow the 10-year treasury. That's kind of one of the things they're very closely tied because they're both very safe investments. So when people pile in from equities, from stock market, into bonds, that causes the bond yields to go down, which
Okay.
vis-a-vis causes mortgage rates to go down.
Okay.
So that was the reason for that.
Okay.
So the overall economy just saw, ooh, wait, hold on, we need to take a break here. We're going to pile into bonds.
Okay.
So that was the reason.
And so, I mean, no crystal ball, but like,
It's in the shop.
yeah, it's still broken, huh?
Yeah.
It was broken
Oh, yeah,
last
yeah.
year too when we
That's
did
right.
this.
That's right. Yeah.
But I mean, so like, what does this mean if I've been a buyer that's been sitting on the fence, that's been quote unquote waiting for rates to drop? Like, is this the time?
No, I mean, it's certainly a good time.
What
I
makes it
would
a
say.
good time?
Well, I mean, look, there's some, I would call like some overall uncertainty in the stock market, the bond market, and with that brings lower mortgage rates. But wages are up, meaning that people have some disposable income. Um, and I think we're at a tipping point where prices have stabilized and or even maybe down a little bit.
Hmm.
So you can get a what we would call a decent deal on price. And
Sure.
yeah, maybe your rate is a little bit higher, but maybe it's 6.3 or 6.2 or in the high fives, as opposed to being in the low sevens.
Yeah, yeah.
That's a big delta. That's a big change. But you still get the advantage of getting a decent price. Where we see the market shift is when, 12 months from now, maybe rates are a little bit lower and prices start to then rise again. So we're
Okay.
at a bit of a tipping point, I think.
Yeah,
You
yeah.
know,
And I mean, look, I was in your office yesterday asking you, hey,
yeah,
like, when do I refinance? And I
right.
just bought a house 3 months ago.
Totally, totally. No, I mean,
So
well, and again, I mean, the
we're not
media,
there yet.
not quite. I mean, the media is great at saying, oh, mortgage rates are their lowest level in a year, and this, that, and the other. And it really depends on your situation, right? Your
Yep.
loan to value, your credit score, your loan type, product, all of those things, the term you have left on your loan. It's really just not a one size fits all. It can be the right time for some people,
Hmm.
right? If they bought at the height of the market or the height of the interest rate market,
Yeah.
well, then yeah, it may pencil.
Yeah. If you got a 7.5,
Totally, totally.
it,
Yeah,
it
it
may be a great
it
time to
makes
have it.
sense, really.
Yeah.
Yeah.
Um, and we were talking last week when we watched, right after the jobs report,
Mhm.
we were talking about this video that I'd watched. The guy who was in it, I don't remember his name, but he talked about how last year there were 4 million home sales,
Mhm.
and we were hoping that this year we would see 4.5 million. But he talked retrospectively about
Sure.
2003 having 7.2 million home sales, right? And so there's a lot of people that have been waiting for a mortgage dip. They've been waiting for the bottom to fall out in the real estate market for pricing to drop.
Right.
Um, in our market, we haven't seen that pricing drop. You and I were just looking at the
Yeah.
numbers. Year to date, we're pretty flat at 1.09%. In the height of everything when rates dropped, we saw in some areas a 30% gain.
Yeah.
We have seen some corrections in certain spots of our market, but
Sure.
our market as a whole is pretty flat. I don't anticipate, I look at the data week over week, and right now our medium sales price is 1.09% year over year. So pretty flat. Our showings are up, our pendings are up, our inventory's up. So we constantly hear, and I hear it from the general public that, man, the real estate market is terrible.
Right.
But if you look at the data, it's actually not the truth. And the reason I believe is that our inventory is up, so it's taken longer for houses to sell, and we see that in the days on market being
Sure.
up.
Yeah. I mean, as you pointed out earlier, I mean, there's just more choices.
Yeah.
So again, it just takes buyers a little longer to view all the homes, make a decision,
Yep.
make an educated decision.
Even if your house is perfect, you may
Totally.
not have any showings right now.
Right.
And so I think now is a really great time to have a conversation about
Yep.
what your needs are. Last week I met with a couple that I've been knowing for 15 years.
Mhm.
And I got an email a couple of days later, a recap, a follow-up email to them about everything we talked about. And they decided that now's not the time for them to sell. And I actually told them that when we sat down, like,
Right.
they have other goals that's going to cause them to move in 5 years, and they would have to pay to sell twice.
Sure.
And so, I say that to say Austin and I are never going to pressure anyone, to do something. It's your goals.
Yeah, totally. I mean, that's our role here, right? Or advisors, right? It's my role. I've always said as a mortgage broker to present my clients with options, make sure they understand end to end what the process looks like, what the total picture of the financial situation looks like in terms of the transaction and what things cost, not only monthly, but overall, right?
Yeah.
And that way they understand end to end what they're kind of getting into and what that looks like.
Yeah. And the same, like, I want to find out what your goal is, because you may think that you know what your goal is. And in the conversation, we uncover that what you thought it was isn't what it is. And maybe now is not the time for you, or maybe you weren't thinking now is the time for you and it is, so it's all about, having that conversation. So to answer the question, is now the time to buy or sell? I think it's individually specific. I think now's the time to hyper watch the market if you're thinking about a move,
Yeah,
because
I think so.
I believe that we're going to see movement in one direction or the other over the course of the next few weeks and months.
Yep.
And now may be the time to begin that conversation.
Yeah, absolutely. I mean, and I think, the Fed has signaled that, interest rate decreases are coming. And although that doesn't directly affect mortgage rates, it is going to have some sort of influence.
That's a great question. We've talked about this before, but
yeah,
what does it mean that the Fed's going to dial down interest rates,
right,
and that doesn't necessarily affect mortgage rates?
Yeah, so the federal funds rate is tied to a lot of things, consumer credit, so auto loans, credit cards. It's the overnight rate that banks borrow and transact on, based on. So mortgage rates are set purely by the supply and demand of mortgage-backed securities, which is why it's tied to the bond market, because these big mortgage bonds are investment vehicles for institutional investors. So
Okay.
yeah. So although it's not directly tied to what the Fed does, the Fed's policy can greatly influence what happens to mortgage rates. But this time last year, the Fed made a rate decrease, and mortgage rates actually ticked up a little bit, right? It's like, wait, what? How does that happen? And it's because, again, they're just not directly correlative, and it has other levers that control mortgage rates.
That makes sense. When's the next Fed meeting?
So it's the 16th and 17th. So the 17th, will be the day that they decide to hopefully lower rates.
Okay.
So whether it's going to be a quarter of a point or a half a point remains to be seen.
And how that affects the mortgage rates actually remains to be seen.
Yeah, we'll all be watching.
Yeah. So you're going to hear a lot over the next week and a half, as we lead up to that Fed meeting about, oh, the rates are falling or blah, 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 or whatever it is, there's going to be a lot of click headlines, right? If you want to sit down and talk to two professionals about what your specific needs are with no pressure, I'm happy to sit down and talk about your needs if you're thinking about buying, or do an equity analysis if you're thinking about selling. Austin, how do they get in touch with you if they want to talk about refinancing or?
Yeah, they can reach us here at South Street, both me and my partner Ben. We're happy to talk about whether it's refinancing and whether it makes sense, or whether I always say pencils for you and your situation, or if you're looking to buy and what that looks like financially, in terms of down payment, in terms of overall cost, monthly payment. How does that fit into your budget? And that's really our role in the transaction. So
awesome. Well,
yeah.
let's wait for the federal for the Fed meeting and see what they say, and then maybe we can do another video, and
Yeah, we'll
maybe we can
reconvene
get
after
Ben to
that.
be in on it as well.
Totally, yeah,
Yeah.
absolutely.
So cool. We'll reach out if you have any needs.
Yeah.
We're happy to help. Thanks for tuning in. We hope this was a helpful video for you.
Yeah. Thanks, John Ray.
Hopefully it was recording. My watch timed out.
It did.